Good morning everybody. Welcome to Stockradar Stocks on the Move for another week. Today's date is the 4th of August 2022. I have one word for you today and that is risk, and we're going to talk about that a bit later on, how we can minimise that, especially over the last year, which we needed to do. Okay, hi, my name is Richard Lee. Educate yourself to success with our simple step-by-step guide that combines a systematic price-based model, remember the price never lies, and complemented by a unique trend intensity rating system, and then supported by a controlled money management strategy that keeps you trading safe. Important. The market is tough simply because many stocks aren't trending at the moment, so your risk is naturally higher. The easy answer is why take on risk on those confused and uncertain non-trending stocks. Show you a couple of those today in our stock review, and you may kick yourselves because there's some ones that have been wiped out completely, and we'll talk a bit about why later on. Okay, so first off we're going to go is we're going to get to the markets. Starting off with our background of overseas markets, ASX 200, going through to the stocks and then through trading tactics. Today, talking about risk, rolling the dice if you choose, or you can choose a safety control. There are choices we make when we trade the stock market, okay? And sometimes these choices aren't right, so we just be a bit careful about that, okay? So we'll talk about that shortly. Now, firstly, what I want to do is go into the Dow Jones, and it is looking... well, it's come up, it's rallied quite well. It's now coming into an area which is going to find a bit of a challenge, okay? Now, last night was an interesting night, still pretty strong last night. We have got a bit of buying here. This is still weak. We're still below the average in this trend line here and a little bit of resistance through here. But it's a challenge ahead. If you can get through this next 50, 100 points, and we may see it move higher back up to 101. But it hasn't done so yet. And volume is middling there, but we're not too sure as yet. This is still weak, but the selling pressure seems to have eased with this rally. So we've got a little pullback happening now. We need to decide whether we're going to go higher or we're going to dump again. So we'll find that out shortly. NASDAQ, well, it fell further. It's probably rallying further, and that's what happens usually in these markets. It's now right up to the average. We've got a bit of buying here. Nothing compared to this selling back here, but selling pressures have eased. So the similar situation. We're now in a stage where it's going to test some resistance, and we may move higher if we can get through it. If not, we're going to go back to S1 again. So we'll wait and see what happens there. The commodities, copper, really struggling. It has eked out a little rally, but there's nothing really significant. The selling is still the main thing. The momentum is weak, so it's got a little bit of work to do yet before it starts to rally. Okay, gold, it's holding on those lows at S1 there. Nothing really significant, not a huge amount of buying, but it doesn't seem to want to go down too much, gold, even though we've got to below the average. The momentum's weak down here, but still this S1 hold. So this level here is at about 1,700, and that's US dollars, so that's what we're looking at the moment as the main area. When you get these trading ranges, it's very hard to decipher what's going on. We can get small bits and pieces, but we are really looking for the big weekly bigs, which are the big breaks of these trading ranges. So there are some trading ranges on the market at the moment we're looking at, but again, while we're in those trading ranges, be it CSL or whatever, you've really got to be very careful because they can rotate between them. What we need is a clear breakout to put those odds in our favour there. So gold is still range trading. Brent crude, well, it's had a couple of weak days. We're now testing this bottom here at S1. So although they increased the output a bit last night, it was a minuscule amount. I guess it's had a little bit of effect on the market. But it hasn't broken down yet, really. I mean, it's testing S1. It's broken through the average. It's in an interesting area, but it has held up pretty well of late. So the jury's still out on this one at the moment with Brent crude. Okay, we go to the XJO. The XJO, the ASX 200, okay, it's come up to this area, moving average, downtrend lines, exactly the same picture. This is still weak, and this is going to be pretty powerful to try and get through, okay, especially in the current environment. So we're going to really have to see what happens in the next couple of weeks to see whether this can really make some ground or not. But at the moment, we're very careful. And on our stock-specific situation, nothing really much is eventuating it. We're looking, we're scouring, we're scanning. Things are coming onto our radar. Nothing's really broken up yet, apart from a couple. So where the jury is still out on those ones. Okay, so the ASX 200, we just go back to our little table as we have now and talk a little bit about this. So the Stockradar portfolio is flat at 22. It's made up of ETFs and stocks. So of the stocks we have 162 stocks in that, and there are now 21 stock picks. Okay, so that's up one. ETFs, one we only hold, which is BAR, which is a negative one. So if we look at our table over here, up 1 to 21 of 162 stocks, which is our complete portfolio, 13% equities, 87% cash, still weak. ETFs has just got one of one. I'm not going to bother about that too much, but we've only got one bearish ETF there at the moment. The conservative portfolio that Stockradar runs is up 1 to 4 of 20 stocks. Those 20 stocks in the data universe are diverse across all sectors, major stocks across all sectors. Just a little bit of it's a general portfolio, it's a safe portfolio. At the moment, it's only 20% equities, 80% cash. So again, it very rarely gets to 80%, to 100% cash, 100% equities, I should say. So it's a conservative portfolio, but it just trucks along, delivering 8 or 9% compound annual growth rate. The 5-stock Energizer is now full at 5 stocks. We use a data universe as the top Stockradar 100 stocks, so which are 100% equities and 0% cash. That's our really aggressive one. The Energizer 10 stock is a little bit less aggressive because it has 10 stocks in it. Okay, it's actually at 1 to 8 this week of the 100 stocks that we cover. So it's 80% equities and 20% cash. So it's starting to move high as well. Of the sectors, we've got utilities and energy still the only two qualify as trending sectors at this stage. So still negative. We've got our aggressive stuff there is now full. The Energizer 5 stock. So that's an interesting sign. But we're taking, when we've got a 100 stock universe and we're only putting 5 stocks into it. So all we need is 5 trending stocks and we're in there. So that's why it's so aggressive. But that's an interesting situation. We have come back a bit on the Energizer over the last year. So we'll be looking for that to start to recover pretty shortly, I would think. Okay, so that's the XJO. It gives you an idea of what our portfolios are looking like and what the ASX 200 is looking like. Struggle city at the moment. Okay, so now let's get onto some charts. Now, last week we went through Coles. I'm going to follow through again today. We looked at Technology 1, which has triggered an entry. And in the same space, you may want to go and look at the chart of NXT at the moment. Very similar patterns there. We also went through Nanosonics, which I'm going to cover again today. APA, SDF, interesting one. And VCX, Vicinity Centres, which is also going on quite nicely at the moment. But today, we're going to start off with Coles. And again, we've been knocking on this door at about $19 for quite some time now, and we're still knocking on that door. And if I just blow this volume up and get rid of all that stuff back there, we can actually see we've got some very good volume here, as we've seen the last couple of weeks. Excuse me. Trend intensity rating is still only +1. We're in a trading range. We're waiting for the break. Remember, I talked about trading ranges before. Trading within these trading ranges is quite difficult. If you're going to do it, I prefer to buy at the low end of the trading range with the possibility of a break to the upside, because I'm a long only trader, I won't go short. So that's what I look for in these situations. So, but I don't actually trade the trading ranges myself. But this one's out testing the highs. It's the MACD is good. The volume's quite healthy. So Coles is looking pretty good to me. And in the consumer staple sectors, there is certainly some support there amongst some of those stocks. They haven't come down nearly as much as many of the other sectors. So Coles is certainly worth watching. Keep your eye on that one there. Nanosonics, which is just a follow-through one, just so you can see what I'm talking about with Nanosonics. We know we've got that huge support area down here that we had with Nanosonics that goes back to 2016. What we've been looking at now is we've been looking at this huge fall down here. And now we're looking at this as a potential reversal. Why are we looking at this as a potential reversal? Because we've had a huge rally, we've broken some resistance, we've broken the average. We've also got some good volume here. If I can just colour that a bit more, it'll make a bit more sense to you. Okay, you can see some very good volumes pushed through here, and the selling pressure's gone out. Now, don't get too excited, because this is the first part of what we look for in a trend reversal. Okay, it's an encouraging sign. It's no reason to buy at this stage, not on my basis. What I want to see is I want to see a pullback now. I want to see some support come in at a higher level to show me that these buyers are serious, and then I want to see it ramp it up through this high. So what I've just plotted out here is a potential trend reversal pattern. If it came back to a low here and create a higher low and then broke through this point here, then you've got a trend reversal. So it won't map out exactly like that, but that's what I'm looking for. They're all different, but all the same, if you get my drift. So the trend reversal projection is just a price structure we look for. That's not exactly how the pattern's going to develop, okay? But it's certainly worth watching Nanosonics, because it is an exciting stock. We've had some good runs in there before. We've got to be very careful of these stocks, as I'm going to show you in a minute, a little bit about these stocks that get expectations built up without much substance. But anyway, they're also, some of these stocks are also worth trading because they're great momentum stocks. We've just got to make sure that when the stops hit, we get out. Okay, so that's Nanosonics. It looks interesting at the moment, but just wait for the development before we can look really confidently look at a trend. Remember, we're trying to jump on a trend. There's no trend there. There's just a bit of a spike up. Okay, so I would see a pullback and a rally to get some sort of trend development, and also it's confirming volume, moving average, and momentum features as well. Okay, now the next chart I'm going to look at is Appen. Now, it's been in the news a bit lately. It just keeps downgrading, profit reports, things like that. I just want to talk a little bit about stocks where they don't actually generate much profit, but they have a lot of expectations built into them. Now, these stocks always go the same way. They go up and then they come down, always. Now, with a stock like Appen, you can do it as a long-term hold or a short-term trade. I'm a short-term trader, so I trade the momentum swings, and when they stop, I get out. So you can see here with this momentum swing high here, we got out here. This is a 15% stop, which is what I generally use. Not entirely all the time, and never any bigger than that, but that's a 15% stop. So this has got me out here now. As a short-term trader, I've got nothing to do now because the three things that can happen are it can go up, which it hasn't done, it can go sideways, which it hasn't done, or it can go down, which it has done. And that doesn't interest me at all. It can go down to zero for all I care. I really don't care. The only thing I'm interested in is stocks that go up. So with this stock here, if you are a long-term holder, you'll be still holding the stock. So what you need to be able to do with these stocks like Appen is make sure your analysis is sound and good. If you're going to hang on for the long term, make sure it's solid and make sure it's good, because if it's not, it's difficult. A stock like Appen, the next one I'm going to show you, are stocks with built-up expectations that always get popped at some stage for whatever reason. So you've got to be very, very, very careful, because those are bought at 39 or 25 or whatever, and now we've got a stock worth $4, okay? And so it's very difficult. And there's still volume down here, so it's still going down at this stage, okay? So this is just a word on these stocks where the expectations are built up and they get popped. They're great traders for momentum trade, but when they say they're going to come down again, you get out. Just remember that wave, when the tide goes out, you've got to get out. Okay, the next one I want to look at is TPW. I mean, actually, it's a nice stock. I've done business with them before. They've been very good. Client service has been very good. I'm really impressed with the way they operate. So their business is probably okay. However, they did get to $14 about a year ago, and they're now down to $3, or in fact, they're back up to $4.60 now, but they got down to $3, and that was in a year. 15% stop is where we got out because it came back. Simple as that. It came back 15% from the high, so we get out. We don't know what's going to happen next. I have no idea. Okay, but what I do not want ever to be involved in is this pattern, because that's the portfolio kills, and that's the killers that we don't want to do. So that's just my strategy. Everyone can have different strategies. I talked about long-term before. If you're a long-term holder of Temple and Webster, fine, but make sure your analysis is sound and it's worth holding. Because if it's not, the profits aren't there yet, then it's still expectations and it's still promises, and they can be dashed very easily. And we've seen stocks like Mesoblast over the years, things like that have just gone up and down all over the place and really have delivered nothing. But also, they are good momentum trades because they do move a lot. So if you're quick and get onto it, then they're worthwhile. So I just want to talk a bit about these stocks because they can be very, very dangerous, stocks that are rising on expectations and not substance. Okay, so that's Temple and Webster. It'll be interesting to see how that develops up to in the future. Trend intensity rating is still -8. Okay, word on some of the metal stocks and mining stocks that we all get very excited about, and it's all about how sentiment and how people feel, things like that, and things get built up and they can get popped, and all of a sudden, at this point here last January, 10th of January, we were very excited about this stock. It was $1.57 and it was going high, and it just rallied about 50 cents in a couple of months, and we were very excited. And sure enough, here we are a few months later, 6 months later, and we're back down to $1 again. So we've just lost 50% of our value. Now, this stock is now in a trading range. So you can pick and choose what you like, but for what I see here, because I'm taking a step back, I'm seeing a trading range here. It can rotate through there as long as it likes. It can be that CSL one, it can be Coles, can be whatever. But until I get a breakout, I'm really not interested. And the only breakout I'm really interested in is one to the upside, and that doesn't look like happening at the moment. Okay, so I could get a trend reversal from down here possibly. But at this stage, it's really not worth looking at. So there are a lot of stocks in that situation that have hit highs and they're rotating. So don't sort of live on hope with these things. Because they can be a disaster. I mean, they're like peddlers of promises, and it can cost you. So you've got to make sure what sort of view you take and how you're going to do it, how you're going to trade it. Long term you hold, short term you get out when your stop goes. Yes, because they can be unceremoniously dumped, these stocks, when things go wrong. Okay, stops will save you every time. You may not be right all the time, but they will certainly save you money. So I'm just going to bang on about that a bit today because it's really, really important when we're trading, and especially now because we're trading, we're trying to get some trends and some of them just haven't developed lately. So we've got to cut those losses and make sure when we are ready, that we are ready for the next upswing and in positions like our 5-stock portfolio is at the moment. Okay, one stock we're going to look at today is Spark New Zealand. Now this one here is a trading range. Beautiful trading range, and it's been intact for almost 2.5 years. At trend intensity rating is 1. This trading range is my only focus. When it breaks out to a new high, I will trade it. What within this trading range, I won't touch it. Okay. The only thing you can do if you're interested in doing it, which is outside my criteria, is you can buy with a stop below the low of the trading range. It's not a bad strategy. Everybody has different strategies, but that's one that I quite like. But it's not a Stockradar strategy at this stage. A Stockradar strategy is when it breaks. So we had a good kick up so far this week. Volume hasn't been huge. Momentum has been good. It's above the average, so it will get a qualifying trend intensity rating if it does break above here. Spark New Zealand. Okay, so it's looking quite interesting, that one, and worth watching. The next one I want to go through is just one that has been trending. I always like to finish on a positive note. APA is truly trying to get through this high up around $12 and has struggled and struggled and struggled. So that's why we need to stop, because it may not go through and it may not go higher. It's a good stock, a good quality stock, but that doesn't necessarily mean the prices can't go down. Okay, so it's challenging the high. We've got a good trend reversal here, which we got into, and an alignment of the stars. We've got a reasonably strong greenish tinge through here, which is good, and the momentum is still high on the scale. Slowed off a little bit, but still high on the scale, so that's good. So things are all still positive. Trend intensity rating is still +8 for APA, but know where your stop is, because if it does come down, it will come back straight back to the bottom of the trading range, probably, which is down around 850. Okay, so that's APA Group. That's one of my little stocks that I quite like. Okay, so that's the stocks I want to cover today. And I'd mentioned before, I want to talk to you a little bit about risk and how that works and how we can try and contain it and how I try and contain it at the moment. So what I always want to do is I want to minimise risk, whether it's using my stop losses or using all my different techniques for controlling my portfolio of stocks, things like that, sector weightings, all sorts of different things. My buy allocations for stocks which go up when the portfolios go up and go down when the portfolios go down. So I'm trying to balance things out all the time. So one very simple way, which is I step back and you've got Stockradar's got 162 stocks. At the moment, there are only 21 stocks trending. They are my focus only. The other 140 stocks are non-trending. I'm not interested in any of them. Some of them might be near on the radar, like Spark New Zealand or Coles, but they're not in yet. So there's only 21 stocks that I'm focusing on because they've got qualified trends. Okay, so that's how I minimise my risk. And any of those 5-stock portfolio stocks will all be out of this group. Any of the stock picks that I have will be out of this group of 21. So that's how I minimise risk. So for non-trending stocks, most stocks, 141, are either moving down or sideways. And if you look at BHP, it's been up from 47 down to 32, back up to 47, now back down to 36. So it's a really tough thing to do. So we've got to be really, really careful about these stocks. When they're not trending, just forget about them. As much as we would love to buy BHP or buy a bank or whatever it is, you've just got to look at this price action, because the price never lies. And it's true. It's where your profits and losses are generated from. So minimise risk by focusing on trends, and that's how I minimise my risk. Okay, trending stocks. Stock-specific selection. So I'm not basing on the ASX 200. I'm looking at stock-specific situations. There are 21 stocks in my group of 162 that are trending, and APA is one of them. Okay, and it's beautiful. It's trending up above the average. Momentum's good. Volume's good. So it's a solid one. The odds are it's going to be higher next week than it is this week, and that's the way trend process works. Okay, enough about that. So the risk I have not as much risk on stocks that are not for trending stocks. Trending stocks don't have a higher risk because we know we've got an odds-on trend that's going to take the prices higher. The trend is your friend. It's an old adage, but it is true. Okay, so I just concentrate on those 21 stocks, and that's it for me. I look for the other ones for sure, so I can try and give you a few tips. But it's really hard. So really what I'm doing is I'm trying to catch momentum. Catching momentum or riding a trend is simply jumping on something that's already in motion. And we see trends occur all the time, so that's why we jump on them, because we know the odds are that it's going to go higher. Okay, so that is a bit about risk, about how I manage risk and how I minimise it the best way I can for Stockradar. Okay, so that's about it for today. What's happening in Stockradar? The newsletter was out last week. I covered the health sector. There's an article on systems, processes and rules, which is a really interesting article because it's so important we have these sort of things and that we don't break them, we don't go against them, because if we do, they're no good to us. They're actually a waste of time. So if you don't want to follow systems, rules or processes, this is not the place for you. Okay, if you want to follow them, then come with me and I'll take you for a ride. Okay. So while we use the rules, okay, we review the overseas markets and a stock on alert reviews a minnow challenging new highs that's already doing well. And it's an interesting little stock, this one, so get along and have a look at that newsletter and check that one out. So just to finish off, risk is a simple thing to minimise. All these things just require discipline to do things, okay? So when I'm looking to minimise my risk, I know I'm only going to focus on these 21 stocks. In 6 months' time, I might have 100 stocks to focus on. I don't know. But at the moment, 21 is 21. Having a risk filter is very, very important, okay? It helps you move ahead in your trading with confidence because you know you're trying to be safe. There are different levels of risk. So in Stockradar, our portfolio, our big portfolio of 162 stocks, I divide all those stocks into non-trending and trending stocks. We then focus on the trending candidates, which I've talked about. The conservative portfolio, which is a diverse data universe of 20 stocks only across all sectors. You know, some of the main ones like Telstra and BHP, those sort of things. Okay, now I've only got 4 stock picks in there at the moment of 20. So it's a very, very conservative portfolio. So of the other 16 parts, that's all in cash and 4 parts are in equities, okay? Energizer is high conviction, high reward. Okay, I believe in what I do and I go for it. So with the 5-stock portfolio, you can see it's the best performer. It's different levels of Energizer. There are 2 types. The 5-stock is the highest conviction, highest reward. The 10-stock is still high conviction, high reward, but it's a little bit more diverse. So I've got 10 stocks. But I think that you'll find there are a couple of other providers who have now found that high conviction is better than diversification if you're trading momentum. So that's pretty well almost like a given these days if you know what you're talking about in these sorts of areas. So capital safety is of utmost importance. That's why we limit our losses to X amount. So we trade these momentum things, we're bullish on stocks, we believe in what we do, but we always still protect because if we can be wrong, God forbid. Okay, stay safe, watch your trends, heed your stops, and I'll see you all next week, and thanks for listening.